This the AMG way, we don't follow the crowd. Quiet money moves, we just say it out loud. Tax-free living, long plays over hype. Build it right once, let the legacy right. We talk ownership.
Welcome. What's up, everybody? Welcome to the AMG free educational webinar. It's Wednesday, and man, we're gonna have some fun today. I know a lot of us are joining in. Sorry for the tardiness. We had some technical things going on. We had to make sure we come correct. That way everyone can see what we're going to share today and talk about and all that good stuff. We had an acronym we created, but I'm probably not share that, Woods. So first of all, typically, you guys have seen webinars before that I've done by myself or with others, but today and moving forward, it's going to be the whole crew. We're going to have a great time. It's going to be like a webinar meets a podcast. We're going to go through some information, share things with you all. We're all going to contribute. We're going to have conversation, kind of barbershop it up. And also give you, you'll hear kind of the internal views and perspectives that we have on these slides and information that we're going to share. So without further ado, I'm going to bring my guys in. AJ Lavender, Craig Cooper, Larry Woods. What's up, fellas? Good evening. What's happening?
What up, though?
Evening.
Yes, indeed, man. So this is fun. This is going to be great. We're going to look at doing this on a regular basis and also post the recordings as well. So that way people can go back and check them out. So every week we'll be doing this and make it a regular rhythm. Because you never know where you're going to catch people, AJ, right? You just never know.
Right. We already got Christina Nichols in the spot watching.
There she is. There she is. We already going to hear from her like, y'all was late. Right. You already know.
That's
man.
Time, baby.
I know, right? For real. So here's what's going to happen tonight. We're going to share our slides and talk about a few different things, some concepts. Some of you have seen some of this information before. We have some new things we're going to introduce. But what you're going to hear that's a little bit unique to this experience is more perspectives outside of mine. You're going to hear the things that we discuss as an organization behind the scenes as well. We're going to be very candid about some things, what we call here, and I think, Larry, you probably coined it, right? We go hard in the paint, the basketball analogy. And we just get real and keep it 100 about certain things and thought processes. So we're going to share the info. We're also going to talk about mindsets in regards to the information we're sharing. That's one of the things we typically don't talk about. But I think in order for us to really digest the info and learn to process, we have to, in a healthy way, be encouraged / challenged. Right, Coop?
That's right.
We got to be challenged, man. So good stuff. All right, so for those who don't know, I'm in Florida. AJ's up in Canada somewhere. It's cold one day, hot the other. Who knows where he's at? We got Larry out in San Antonio, and Coop is up in Maryland and DMV area, man, and let's do it. So I have the slides, AJ, but if you want to share it, what you want to do?
I could definitely do that. I'll pull that up.
Okay, cool. All right, all right, cool. So a lot of you at the end of this, you'll have opportunity to ask questions throughout or even at the end and reach out to us and ask questions. A lot of the folks that we know are going to come here that are here and going to watch this are interested in certain concepts, right? So financial services, but in regards to, insurance and annuities and different things like that, and, private strategies, all that good stuff. So we're going to touch on a lot of it. So buckle up, get your popcorn, get your notepad, get on your computer, get your phones, fingers going on that phone to send us messages because we can respond to you live. So do not forget that. Christine, I already know she got I got 5 questions already on deck. She's ready to fire up. Yeah, she's like, why y'all keep talking about me? That's all good. It's all good.
London, you might have to do it on your end. That's fine. I shared on it.
Oh, that's cool. That's all good, man. All right, cool. Here we go. I'm going to share my screen and get us rocking and rolling. All right, here we go.
Yeah, so if you're watching on YouTube Live right now or Facebook and you do have comments or anything like that, drop it in the comment section below and we'll be able to see them and pull them up on stream too.
Yeah. All right, I'm going to try and see again. I had it earlier, AJ. Now it's like disappearing on you, boy. So here we go. Hold on. I had it up a second ago. Let me go over to here and do that. All right, guys. Of course, the live techie issues. We're going to get it right in a second, guys. So let me make sure we got this thing in the right direction so we can get this thing rocking. All right, fellas, here we go. Let me try this.
Rocking and popping.
Yeah. All right. There we go.
Boom.
All right. Cool.
There it is.
Here we go.
All right. So for me, I need to go over here and do this. All right, cool. And then put us over here. All right. Y'all good?
Yep.
Okay. All right. It's gonna be interesting because I can't see y'all while I do this. So while I make the changes, but that's all right. We're gonna be all right. Okay, cool. All right. So AMG and Associates, as you all know, here hanging out with us today. We're gonna talk about custom asset protection and also retirement. All right. Now, in other weeks to come, we're gonna have a lot of other topics and things that we cover, but today is gonna be these two things. All right. Now, as some of you know our team, some of you may not. There's obviously me up top on the left. We got brother AJ Lavender, Craig Cooper. We got Travis Helm, Larry Woods, Gianna Killian, and Zoe Grimes up there. Yes, she is my daughter. So we are the AMG and Associates team. And right here, Larry, you are a fan of these people. You are a fan. I'm gonna let you help me out with this because you talk about them all the time. These folks are everything to us. They are, would you say, our vertebrae, if you will?
Absolutely. Absolutely.
Who are these people, man?
You know, I champion people who got our back. You know,
yeah.
Does our back office team.
There you go.
Right. They keep us in line. There's a compliance team on that list. Right. There is a application team on that list. There is a legal team on that list. There are coaches on that list. There's a team of people that work in a creative space that actually pull creative things out of the air for us to present to clients with special needs.
Oh, man.
That's why we're custom asset protectors, because we have a team that can customize a product or create a product that doesn't even exist to help somebody with a special need. Come on now.
I didn't forget about it, but I'm glad you brought that up. These people actually will listen to us and others like us and say, oh, this is a common thing we're seeing. Let us reach out to one of our partners and create a solution, i.e. a new product that wasn't even on the market.
Right.
To help Mr. and Mrs. Jones. Man, come on, man. Come on.
What's not to like? This is why I love them.
Exactly. So this is our everything. These are our people. They're awesome. And but we want to get into this here. I think, you know, Larry, we can chop this up. Coop, jump in, AJ, because we hear all this stuff, man. A lot of the problems, right? A lot of problems that people bring to us, we hear it all the time. Coop, I know for you, man, you've heard a couple of these things already. But go ahead and run through a few of them, and I'm a tag team because I'm gonna kind of come in as your co-pilot to give us maybe some context. All right.
Sure. I'll just run right down the line. You know, limited access, you know, the problems that people just to talk about with us are limited access to capital without all the red tape. Right.
Yep.
You want to pull money from an IUL? It's basically one form.
Check this out. What's the red tape though? I want to park on this since it's just us and we can hang out as long as we want. Let's talk about that red tape. Okay. Limited access to capital without red tape. Well, here's an example for those who may not like, what do you mean? Well, I had a 401k, but they say I can't touch it. Or I put my money into this particular vehicle, whatever it is, at the brokerage company. I can't do that. I can't. How often do we hear that, fellas?
All the time.
All the time.
Go ahead, Coop.
You have limited control over your income, right? In other words, you have, you know, certain access to certain amount of funds.
Dude, I want to go down some rabbit holes today. I had some extra espresso, so I'm feeling it, fellas.
Oh, come on.
Wait, am I already hitting the button?
We might be in the paint earlier.
You gonna get the paint early? Oh man, because here's the thing, man. Like limited control over your income. All right, let's really drill into that. It's see, hey, there you go. Somebody calling. How do I fix it? Limited control. So what is that? I mean, we know what that means, but how do we expect to have control when we gave people control decades ago? But all of a sudden we want control. You gave that joystick away a long time ago.
Or when you started that job. You gave that away. Yep.
Right. And a lot of people, like, if you said, hey, all right, how much are you going to be making in 5 years or 10 years or 15 years or whatever? I mean, you can kind of spitball a little bit and kind of get a roundabout, but guesstimation, keyword guess. But it all depends on whether someone sees the value in you or not. And if they do, how much? If somebody likes you or not, if a company stays in place or not. It's so many intangibles and unknown variables that control your income. And one of them is not us, not you. So we hear that a lot. What's the next one, Coop?
Heavy tax obligations.
We ain't got to say nothing about that.
Yeah.
We all know taxes are always going to go up, right?
Yep.
It's definitely a problem.
Yeah.
We don't want to park there, right?
Nope.
Next up would be market volatility affecting my 401k, 403b, IRA, Roth, TSP accounts.
Yes. All right. Let's make it real. Woods, we have a current client that told you that they lost X amount of money in a certain amount of, like, a short period of time.
Yes.
And it was a healthy 5-digit number, wasn't it?
It was. Yes.
Now, AJ, is it fair to say, because you'll check me, is it fair to say, if you can't stomach losing 5 figures, you probably should get your money out the market.
Yeah. It's like gambling, right?
Yeah. Like if you go to the casino and lose $1,000, you probably don't need to be, and you heard about it and crying, you probably don't need to be in there in the first place. Cool. Keep on, man.
What are you willing to lose?
How about that?
Well, it goes back to the second one too.
What's that?
It goes back to the second one too. Limited control over your income.
Oh, yeah. There you go. Way to connect some dots. Yep.
And if that's not enough, financial uncertainty year to year.
Market goes up, market goes down.
But okay, here's what's crazy. I wasn't gonna park here, but I'm gonna park for a quick second. Financial uncertainty year to year. But you know what is certain is taxes are going up. Come on, man. That's one thing you can be certain. Yeah. You know the market's going to be volatile. You know, and you also know taxes going up, but that you also don't know what you're going to be making year to year. Like, dude, that's bubble guts all day. Like, but a lot of people are used to sleeping in that reality. So anyway, go ahead, Coop.
You always feel financially reactive and not able to be proactive.
Yeah, because of all the ones listed before that.
Dude, yes. I feel the pain coming soon, because it's true though, man. Like, one thing that we really want to encourage people with is that when we talk to people and they bring all this to us, is that last word, being proactive. Be proactive. And that's a lot of what we're going to talk about tonight. All right, Coop, last one.
Last but certainly not least, no legacy protection or plan and subject to probate.
Yep. And a lot of folks know what that is. Yep. So legacy protection. Legacy protection. Legacy protection. So those are a lot of issues. But what if, Woods?
What if?
What if?
What if? What if? What if that was a tax-free cash cow? Financial vehicle that provided safe, reliable consistency, liquidity, uninterrupted principal, expected rate of return, legacy protection, hedges against inflation, builds a safe, tax-free retirement.
Yes, Lord.
Builds a safe, tax-free retirement.
Yes.
That deserves to be said twice, right? Come on with it.
Get your fans out.
That's it.
Provides income replacement, private banking, tax advantage, tax-free growth.
You know, but all I heard was what if. And yeah, that's cool. This list is nice, Larry, that you just read, but that sounds like Santa Claus. I know he ain't real.
Okay.
This is too good to be true, Woods.
Well, let me show you what makes it real.
Okay. Ooh.
Let's educate people on what accounts versus contracts.
Yep.
Right. When we think about accounts, what we think about? The 401ks, the usual, the Roth, the IRAs, even your bank account.
Yep.
You are a participant in that product. You don't own that product. What that means is they dictate the terms and conditions of that product, of your money. Thus, the list Mr. Coop read off. No control. You have no control. Versus contracts, where you are the owner. And the contract is between you and the carrier. There is no middleman. You dictate the terms. If the carrier likes it, the carrier signs off.
That's empowerment versus, you know, it's kind of like, man, when I learned this stuff, man, it was like the scales were pulled off my eyes, man. And I could see, you know, like I could really see and understand being an account holder or being a participant does not mean ownership at all. It's kind of like when, you know, I've heard a buddy of mine say, you know, something about his house, you know, and he was like kind of fussing about his house. I'm like, you rent, that's not your house. That you rent, dude, like that's not your house. Now, you know, it's different when you're the owner, but you're the renter. You're not account holder. You're a participant, which is why, don't y'all remember, like, I'm sure, I know, you know, people talk about, you know, the fees they charge and like even bank accounts or how they did this and how they did that. Well, when they own the thing, they can do whatever they want.
Yeah, that's right.
Of course. So you can't really get mad at them. They own it.
Change the rates, change the rules, all of that.
Exactly. So, and as far as protection though, like that's one of the biggest things we teach on is the difference between accounts and contracts is the limited protection on accounts. Okay. Where with contracts, they're more private, to Larry's point. Right. So you got to understand this, like, why are we parking here? Because this is important. We want to encourage people to think differently, start thinking like contracts. I always say, if you're trying to be like them, you got to learn what they know and do what they do. You can't want to be like them, whoever that is in your world, whatever level you're trying to get to in your financial situation, legacy, whatever it is. You can't get there by not using the tools that they use. Doesn't work. I want to be a race car driver and win Daytona 500 in my Honda Accord. That don't work.
Nope.
So we have to be open to learn about these new types of vehicles. In this example, contracts. Now, there's the cuss word, Larry. There's the cuss word.
To some people, it is, right?
Okay. Holla at me.
Because when they see the word life insurance, hear the words life insurance, they always think about the death part. It's like somebody with cataracts. That's what they got LASIK for. Peel those layers off your eyes.
Whew.
So you can see that there's living benefits to a life insurance policy.
See, this is key. I did a video on this a while ago, and we've talked about this, guys, over the years. See, life insurance, people see that and they automatically judge it based upon their prior programming, based on what someone may have told them. Okay. But when you really look at what these contracts do, certain types of contracts, let me be specific here. Okay. Certain types of life insurance contracts, obviously they have living benefits, and obviously death benefit. But here's what they do. You know, I'm going to say they, whoever the they is in your world, right? Whoever the they is. What they look at is, what does this do? Not what is it called? They don't get hung up on life insurance. Oh, see, you know, start making faces and cutting up. And see, my cousin Rufus one. He was insurance agent. He tried to. Let's stop. High net worth people and people who have been blessed financially and understand financial stewardship, and they are financially, with all due respect, they are financially literate and they understand these things. They're not looking at the name of it. They're looking at the function. What does it do? How does it execute for them? Does it help me get to where I'm trying to go? I don't care if it's called donut insurance. If that's what it's going to help me to get where give me that thing. Give me that donut insurance. If it's going to help me get to where I need to go. And that's another part of the program, AJ. You know, I go hard on this, man, because we just start judging stuff, you know, and this right here is a major pivot in the thinking. We're going to talk about the life benefits, the living benefits, as well as obviously what you can do for estate preservation and the like.
And these things, this product's been around, man. People have been using it since the 70s.
Man, this product, but insurance been around how long? A few hundred years ish.
Right. It's nothing new to the high net worth individuals, or as you say, the people that's been blessed financially. It's nothing. It's not new to them.
Oh my God, you open up some cans, man. Your energy is hot, is awesome.
Get ready to hit the button. Get ready to hit the button,
AJ. Oh my gosh. The stuff we're about to get into may be new to you, but it's not new, to Larry's point. Being new to you does not mean, hear me, please, please, please. When it's new to you, it doesn't mean it's bad. When it's new to you, it doesn't mean that it's shady. When it's new to you, it doesn't mean it's crooked. When it's new to you, it doesn't mean this is a scam. It's all it means is that it's new to you.
That is new to you.
That's all it means. So please take our passion and our direct conversation for encouragement to really look at an opportunity to change the trajectory of your family, your finances, maybe your retirement, your financial goals. It all starts with that mindset, bro. Craig, you know what I'm saying? We talk about this stuff all the time.
All the time. You know, and the operative word was programming, you know. At some point back in the 70s, 401ks were new to everyone too.
See, man, I got two of them. Come on.
Right?
Even the comment section is telling you to preach.
Yeah. But you know what's crazy though? To your point, was it 1977 or 78 is when the 401k, and just going down that rabbit hole, was created back then. The 401k was introduced because employers wanted to take the financial responsibility of pensions off of them. So they lobbied to have something created that would be a responsibility for the employee to take care of their retirement. Employers got tired of having that weight on them. So
what were they getting tired of? What was the weight, Mondo?
Well, part of it was paying for all these people's retirements.
Financial weight.
Financial weight. They didn't want the financial weight on them. They said, we're going to move that over to y'all since y'all don't want to retire.
We like our bonuses. We increase our bonuses.
We want to increase our bottom line. So we're going to protect it. We're going to increase it. We're going to scale. We're going to do all that. And by the way, that retirement part thing we had, pension, we're going to move that over to this thing we created with the IRS called the 401k, which is a tax code. It is not an actual plan. They just said it's a 401k plan, but it's actually a tax code to move the responsibility off of the employer into the employee. Okay. Now, when I can only imagine, to my whole point on this is, I can only imagine, fellas, that when it was introduced to the employees from the employers, that because it came from the employer,
it's the gospel.
It's the gospel. It's the gospel. Ain't nobody questioning nothing. Yeah, my job, man, they all right by me. You know, hey, they let me tell you what they get. They got this 407 C plan. I mean, what is it called? 401k. Yeah, that. And they taking care of us. Man, they got the retirement plan, but no, ain't nobody read nothing. But then the same week, you talk to them about you leveraging life insurance for all these different vehicles we're going to get into, a product and industry that's been around for 100 years plus, easy. We got some, forget the industry. There's companies that's been around 150 years, let alone the industry.
Yeah.
But to hear that, ain't nobody fooling with that. Nah, man.
Is it the messenger? Is that what you're saying?
It could be. It could be. It could be a mixture of things. I think it's programming. It's the messenger. It's a lot of different things.
Definitely programming, because this wasn't taught in many households.
Oh, sure wasn't.
Under a certain level of income, this was not taught.
AJ, you know what I knew about insurance. Let me tell you, it's a short list. You ready? We need insurance because somebody died.
Yeah.
We need to get insurance because somebody about to die. Man, did you see what happened at the end of that funeral? They didn't have no insurance. Man, did you see they had an estate sale and lost everything, all this debt because they didn't have no insurance? That was literally the 4 categories I would hear growing up. Cool. Am I lying? Like,
nope.
So to be fair, you know, if that's all you around,
yeah.
I mean, you know, I see why.
Yeah.
You know, but I love the fact, and I'm grateful that we are in an opportunity where we've taken the plunge into new information and say, you know what? I know what I think. I know what I heard. I know what people, you know, all the stuff. Let me find out for myself.
And then we live in an information age where we can transfer what we learn on a platform like this to be able to reach the masses.
Exactly.
Right.
Exactly. And this what's crazy is that this information that has been around forever, now people are starting to become awakened to it. Right. Like you start to see a lot of things on social media, right? Different people posting stuff, this and that. And it's a lot of people trying to get hip to the power of it. And we're going to get into some more stuff about how powerful it is, but we want to really break it down on a kindergarten level, start from the ground up. All right. Woods, let's
Swiss Army knife of wealth.
Yeah, there we go.
Well, this is a nice little knife set here. Life insurance, it can do personal financing. It can act as a savings account.
Yep.
It can act as project funding. Of course, it's got a death benefit.
Yep.
It does retirement funding. It can be put in place for income replacement. Of course, it gives you true ownership because you would be the owner. And you can also perform some private lending, in which, Mondo, I know you have something to say about private lending, if not the others.
Yes, sir. Yeah. Oh man, yeah, he teamed me up. I feel like we're in church, and I'm like, read, and you read it off.
Right.
All right. So personal financing is what it is, but instead of leveraging, you know, the bank that you may, you know, participate with or whatever, and go get a loan for the car or personal loan or whatever, you can actually build a contract with a, you know, whether it be IUL or any sort of permanent life insurance. You can build it and design it. Well, we would do that for you, so that way you have that feature of personal financing. What does that mean? You finance it from yourself, and there's certain benefits to that. Meaning the terms are way different. We won't dig into all that right now, but the terms are way different than they would be if you went to your particular bank or credit union. Okay. Savings account. There are people that use their life insurance contract as a savings account. We had a guy, actually, I talked to him today. He was like, hey man, I got another, you know, healthy 5 figures I want to throw into my contract. I just sold a little property, blah, 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 blah. You know, walk me through it again so I can put that in there. And I wanted to stack up some money and be protected in this contract, as well as get a high return on it, more than what my savings account will give me at my bank. Cool. Project funding. We have individuals that are entrepreneurs, whether it be contractors, whether it be whatever, and they're food truck owners, this, that, and the other. They're funding their businesses utilizing the cash they have in their insurance contracts. These are all living benefits, these 3. Then there's the 4th one. This is the death benefit. Now, I mean, that seems like, oh, that's simple. Yeah, it is simple. But boy, what can it do? It can protect what you've built in your life. It can set your family up, literally go from being thousandaires to millionaires overnight. And as long as you set it up right with the trust and direction and all that stuff, then that death benefit is massive. Massive. It can mean the world. Matter of fact, I haven't talked to y'all about this today. This morning, one of our AMG clients called me. Her dad passed. And I talked to her for about a good hour, or she talked to me. And I listened, you know, obvious reasons. And I'm going to tell you something. At one particular point in the interaction with her years ago, she was kind of kicking rocks a little bit, like kicking the can down the road. You know what I mean? Like, I don't know. Yeah, I probably should. You know, I know I need to do it. We hadn't done it. We were kind of waiting, blah, blah. You know, it was kind of, you know what I'm saying? Kind of him hawing around, Coop.
Yeah.
You know what I mean?
Yeah.
So with a lot of, you know, conversation, this, that, and the other over time. We ended up doing it. Do you think she's upset about those conversations where I encouraged / challenged her? Do you think she's upset about those now? Do you think that now she has an opportunity to change some things in her family's life? She even told me about some of the stuff she's going to do. But if she hadn't done it, what would that story look like today? Yeah. Literally today. Okay. So death benefit is huge. Then there's retirement funding. This is one of my favorite ones. Where people are supplementing their income, their retirement income, by building their own. Now, the key words here, Woods, Coop, AJ, building their own retirement. Either sole retirement, because they don't have a retirement plan, or supplementing what their current plan may be. If they have a pension or 401k from their job and they've been in it for years and this and that, they're like, we had one client, we'll show you later. She was like, I don't know. I don't really trust that thing. I mean, I know it's supposed to, but I need to take the bull by the horns myself. Can I do like a thing on my own just in case? I'm like, sure. Okay. And it's also tax-free. We'll get to that in a little bit. Income replacement. So cool. We've talked about this. That means two things. You pass away and you're the breadwinner. That's income replacement to your loved one. Or the living one would. Whew, you get laid off. Mm-hmm. Mm-hmm. It can replace your income until you get back on your feet.
That's right.
It becomes your the unemployment fund instead of you hitting up the government. Right? You just holler at the agency of me, right? Mm-hmm. And go ahead and claim your unemployment from your own contract. Then, of course, true ownership. Now, this may seem like obvious and simple. There are a lot of individuals that we help that are desiring to have as much privacy as possible. Because we know, AJ, you're a techie guy. Yeah. Information's everywhere. There are people who that bothers them. So they want to have private contracts, things that you just can't Google and find. Right. And then it's private lending, layer to your point. This one's fun. This one, other of my favorites, where you can literally become a bank for others. You can lend out your cash to others. And there's some phenomenal strategies that we see our clients doing, creating passive income. There's ways to do it. So, of course, it's not just as simple as lend your money and you make money. There's some dynamics that you got to set up. Basically running a business, right, Woods? That's right. You're running a business. And the capital that's running your business is coming from your life insurance contract. How beautiful is that? All right. So I know that was long-winded, but this is important, man, because it's not, again, what it says, these two words down here, life insurance, it's what it does. Pause long enough and stop staring at the red and gold here. Right. And actually pull the silver tools out and see what it actually does. If you don't pull these tools out and you just leave the red little thing here, you just look at it and it means absolutely nothing to you. Mm-hmm. Anybody got time for that? That's a little red gadget. What is that, a toy? Why would I care about that? Then you open it up, you're like, oh, shoot. Okay. It does. Wow, I can. Mm-hmm. Okay. Then you talk to someone like Cooper, Larry, AJ, myself, and they say, hey, that one with the ridges, how do you use that? How what's that little one for down there? And you start learning how to use this bad boy for your benefit. All right. Customized. Speaking of this, boy, oh boy. Okay. The reason why we're picking on the 401k today, for a lot of reasons, guys, we're going to barbershop it and we can go hard in the paint as y'all want. We hear the 401k conversation all the time from a lot of individuals. And we know why they have them. It makes sense. I mean, you have a job, blah, 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 blah. But if I can be transparent, Woods, can I be honest, man?
Yes.
If I hear one more time that this thing is like the gospel, like it's the missing book of the Bible, I'm going to scream, bro. Like, because, I said this to y'all yesterday, AJ. Mm-hmm. Do we have any client out of all the people we help, or even people we haven't helped but we've talked to, how many folks are actually living solely off of their 401k?
0.
Thank you. Okay, Coop. How many people who are on the younger side of things that have them, that we know and don't know, think that they will be living off their 401k when they're older?
Probably all of them.
Probably all of them.
Probably.
What's happening in the middle? I can't understand that. Is it naivete? I'm just believing what the HR person told me. But as you get further down the line, Father Time blesses you with some more years. And maybe you start seeing things. Wait, hold on a second. Okay, cost of living is increasing. Taxes going up. And it seems like as we get older, we spend more money. Because we want to enjoy life at a different level than we were when we were younger.
What was that number you threw out the other day or once before, stating what's the average year that a retiree would spend on their 401k?
Oh, yeah, 11 and a half years.
11 and a half.
And that's how much money?
That's off $1 million policy.
That's off $1 million. That's off $1 million in your 401k. If you have 7 figures, $1 million, 1 M in your 401k account, it will last you on average 11 and a half years.
Wow.
So if you return at 59 and a half, that sounds a little short.
Early 70s, you're going back to work.
You're going back to work.
Okay. And that's if, you might be shorter depending on how the market does, because people look down here in the second section. We all remember 2008. We lived through that. We remember 2022. We lived through that. Oh, that's right. And right now. Hello.
And right now.
I got this great question the other day from one of our clients. He said to me, hey, I wanted to meet partly because I wanted to know, are our assets safe because of the war and, just the economy, the different things happening, blah, blah, blah. We see the result of, gases, all the things you see, things that are happening. I said, you are absolutely safe. 1,000%. And there's reasons for that. Now, if he called and asked, and he didn't, to say if this was a conversation, Coop, hey, how's my 401k doing right now? I wouldn't have responded that way. Mm-hmm. I would have been sounding like Porky Pig. Well, what happened here? Right. Okay. So, and that's one of the I think for guys, I want to speak for y'all, but isn't that one of the things we love about what we do?
Yeah.
We can speak with confidence that y'all good.
That stop loss is solid.
0 to hero.
Mm-hmm. 0 is hero.
That's it, man. Yes. Hey, thank you, brother DA, for that. Thank you.
Mm-hmm.
Thank you, sir. Yep. For sure, man. So, you guys are reading here what it says, but the losses require larger gains to recover, right? And that's in a 401k. And that's what makes people nervous. So if you've lost 30K, like a client of ours recently, you've lost 30K, what has to happen and how long, Coop, before they get that 30K back to where they were?
Mm-hmm.
And again, like if you're in your retirement years or approaching it, that's some anxiety for your behind, man.
Mm-hmm.
You don't have time to wait.
You don't have time for correction. Well, dude, I made a post recently, and most of the stuff doesn't get on my nerves when people say things about me or whatever. But this one got on my nerves because of the lack of logic. It wasn't even about me. It's like the guy was like, well, just stick it out. Stick that 401k out and everything because it's going to correct. Now,
then the same people. Yeah, go ahead.
Go ahead. Say what you got to say.
Yeah, they're the same people that say, boy, but it come back. When it comes back. And then I go, what if you never lost? What if you never lost?
What if you never lost? But I'm like, it always comes back. Dude, she's 68.
Right. She don't have time.
She's not 32 like you're behind. I looked at him. I saw like, oh yeah, see, he just, you might, if God don't call you home, you might have time for it to correct. But Betty, she knocking at 70.
Mm-hmm.
She don't have time for it to correct. She needs certainty. Certainty. So if you have a 401k, a 403b, a TIA, anything that's in the market. Now, we're not saying that all these tools are trash. We're not saying that. What we are saying is that if you are looking to feel different and have more security about your finances and what your money's doing in these tools, there are other options. It's not the only thing. That's the part, AJ, that really gets me wound up.
Mm-hmm.
It's not the only option. You can have IRAs and Roths and this and that. But the problem is, though, I see is that people have either only this or they have it and they don't even know what it does.
Right. Or what it's gonna do.
Or what it's gonna do. And their financial situation isn't where they want it to be, where they can't stomach losses. But yet I'm gonna stay in it. To me, it's like, come on. So I'm really passionate about helping people like get out of that matrix, man. Get out of that. And
look
at the numbers.
Life is gonna life. Life is gonna life.
Yes.
Preparation means everything.
Yes.
And there has to be a better option than just to wait. Because at the end of the day, that's all you got. That's all you can do. Just wait.
So cool. You handle this, man, because you break this down good.
Well, this is not a hack. You are, in fact, leveraging no reporting to the IRS. Certain situations, leveraging IRS code 72E 7702 101A and the Tamra Tefra DEFRA tax citation. See, these are all citations and laws that are enacted by the IRS, right? These are their codes, not ours. And these legitimize the fact that this is in fact insurance and not an investment.
Yes.
Because we know with investment comes that T word, taxes.
Correct.
Yeah, this has nothing to do with securities. Absolutely nothing.
Yeah. And here's what's crazy, man. I believe people need to know why we put this in here. And I did it because of the comments that we would get on live webinars with people on with us. And they would say stuff like, this is a hack, or this is a hustle. It's too good to be true. It's that and the other. And respectfully, I wanted to say I didn't. Well, no, I disagree with you. We just know how to read. Read what? The codes, the citations. And we know how we're licensed to work with these products. And when it's designed the right way and funded the right way and put together with the right strategy for the right purposes in leveraging these particular codes, you can do some incredible things with these contracts. Who cares that it's life insurance? Guess what? The next slide is going to show you all of it. Coop, what do you see? There's two words you see in each one of these codes. Kind of rhetorical. There's two words you see. Common denominator.
Mm-hmm. Internal revenue.
Yep. And life insurance.
And life insurance.
Mm-hmm. These are their codes. I didn't type this up to try and impress somebody. No, this is literally from the IRS tax codes.
It was written by them for us to use.
Yeah.
That's right.
Mm-hmm. Exactly. So this right here is like learn and dig into it. This is where we're going to empower you. Just learn on your own, study.
We use this to customize too.
Yeah, this is what we use. Yeah, absolutely. To stay in the governance of these three codes, and also the next slide, the citations, to make sure that you're not creating a taxable event, right? To make sure that you are in compliance within the bounds of your contract, the way it's designed, based on your age, health, and funding. Okay, and the design of it. Now, again, for the record, guys, we all know that every contract is different because people are different. They've got different, strategies and reasons and health and age and gender. You know what I'm saying? Yep. So there's no one cookie cutter, which is why we really employ you, whether it be us or somebody else, man. That's fine. But have somebody that knows what they're doing. So who knows how to customize your insurance Ferrari. Don't get a Corolla mechanic working on your Bugatti.
Don't do it.
Don't. And I'm going to say it. I don't want to poo-poo on our industry.
Let's get it.
If cousin Ralphie just got his license and he's a solo agent, he got his license and everything 2 weeks ago, and you're his first app, if he's not surrounded by people with knowledge, education, and possibly even introducing these people to you, and he's just doing it solo, run. He's going to build you a lemon.
Or at the very least, educate yourself after he's done.
Yes. Because and here's the reason. I sound like I'm fussing. So here's what's happened before. We've had several people come to us and say, hey, I hear what you're talking about with you and your friend on this webinar and you and your guys on this webinar, whatever. I saw you speaking on this thing. And everything you're saying sounds really awesome. I have a life insurance contract. I don't think mine does that. I don't even understand it. I don't know what mine is. Okay. Let's take a poll. You ever heard that, Larry?
Yep.
Coop, you ever heard that? AJ, you ever heard that? Okay. So one of the things we love doing is meeting people where they are, say, hey, you know what? Excuse me. We're going to help you understand what you have. And if it makes sense for your strategy and what you're looking to do, we're going to show you how to leverage what you already have. And like, boom, you're good to go. And if it's not, then we got to look at how do we make this work for a purpose. We're not big on like getting people to cancel stuff. Like just like we're not, no. It's like, can we figure out a way for this to work in your flow, your system, your strategy? Yeah. Okay. And that's what we want to do, especially if you already had it and you pass like any contestabilities and stuff like that. You know what I mean? And you've got money in it. It's like, let's figure out, let's repurpose it maybe. Right. Excuse me. But we want to make sure that we educate people and help and empower you to say, look, let's look at what you have. And if we have something to fix, we will fix it. If we need to pivot, we'll pivot. Yeah. But to your point, guys, like do the research on your own. All right.
Sometimes we see illustrations on their, on their insurance contracts, and some of them, they look good right from the start, but then you go down to, your year 70, and all of a sudden we start seeing them lapse. It's like, oh, there's a big problem.
Yep.
And then everybody's on social media complaining about them.
Yeah.
And that's what's crazy. Insurance is one of those industries where I feel like it gets a harder rap than other industries. It's something, no one's perfect. And I know that sometimes, but I know that if you go have a bad experience at a restaurant, right? This restaurant's been around a long time. People that have them. You've been seeing stuff on Instagram and everywhere else. So he's like, you know what? I'm gonna go there. I'm gonna go try that steak. I'm gonna go ahead and get one of those contracts. I've been hearing about it. I know it's been around a long time. Let me check it out. And then that steak, your contract, and that experience you had was subpar. Maybe the steak was overcooked, undercooked. Maybe it was just nasty. Maybe the seasoning was off, whatever it was. Maybe, it looked good when it laid there, but you bit into that thing, try to put it to work, and you're like, oh no, this is trash. Right? And you get your contract and you're like, it looks great, and they explain it to you, and they had charisma, and it was all awesome. And then some time plays by and time is chewing on that thing. And you're like, oh no, this is not what I thought it was gonna be. It's trash. Okay. So definitely have the right people putting your stuff together, because when you have those situations, it seems like the restaurant gets more grace than the insurance industry. I feel like you could have a 1-to-1, bad, and people gonna kill the insurance industry and give some grace to say, well, they got good burgers though. they got other, you had them fries. But in the insurance world, one bad contract, one bad experience or whatever, then the whole industry is garbage. That agent is garbage. I met this guy, AJ. He's an agent. He's garbage. I met his buddy, Larry. He's garbage. I met a guy in another company named Coop. He's garbage. And this other dude, garbage too, named Mondo with some weird name. Dude, insurance industry gets zero grace.
Yeah. It's like if you have ever had like a bad mortgage broker or a bad, real estate transaction, you purchasing a house, unless to say things go sour, does that mean real estate's a scam too?
Yeah, that for real.
Right. I'm never buying a house. I'm going to rent for the rest of my life.
I got a TP. I'm chilling.
I'm in the jungle.
Right. So, all right, let's have some fun with this, man, because I know, we want to teach on the legitimacy of these contracts. So before we get into how we leverage them, we want to give you an example, right? I'm gonna start by saying this. Banks don't use banks.
That's worth repeating.
Banks do not use banks to generate their wealth.
Are you saying they don't use their own products, Mondo?
No. You ever go to a bank and notice the coop, how they got the vault open, and you like, man, ain't nothing in there. Just safe deposit box.
That's it.
Where all the money at? Right? You ever notice that? Okay. Well, what are they doing with their money? And with their money? And this is a lot of people don't understand. We learned this out. It blew me away years ago. I was like, wow.
Oh, too bad I don't have that. Do we have that the document on this slide, Mondo?
With the numbers?
Yeah.
Yeah.
It's on here.
Yeah. So we're gonna because this is killer. And so for instance, this is what happens at banks. So this is us, my wife and I, we counting our little cheese, made a little paycheck, got the calculator out doing budget, and we say, you know what, let's make sure we keep this money in the bank, whether it be checking or savings or whatever, and put it in the bank. And then we take some out, right here, because the cycle, get some groceries and put some more in and go pay the bills, and this, the vicious cycle of just in and out, in and out. Now, when we put money in, even though we take some out, 60 to 70% of the money we put in there, the bank does not keep. They reinvest it. They're using our money to make money. Now, that's a business model. I'm not hating on them. Okay. I'm not at all. This is just banking 101. So they go leverage money. They have to sell money to make money. Right. That's like mortgages, things like that. But before they do that, let me show you how gangster this is. So you put the money in here and they immediately reinvest it into life insurance policy. It's called BOLI, Bank Owned Life Insurance. This is a very real thing. I did not make up the acronym, and neither did one of the guys. This is legit. Okay, there are firms that literally have BOLI departments. We have a former colleague who was actually over the BOLI accounts at a particular institution when he was just a CPA. Okay. All right. So they invest 60 to 70% of their reserves into life insurance policies. Well, on who? Big question. On who? Woods, who are they taking policies out on?
Bank employees.
Oh, you mean the same people like in my job that gives me the 401k and they give me health insurance and they give me a small like $50,000,
yep.
$100,000. Oh, okay.
Yep.
Those people. How can they do that, AJ? How can they take they're not my family. How can they take a policy out on me? Well,
they're insurable interest.
Insurable interest.
Yeah. They're allowed employer to employee. They're allowed to do that legally all day long. All right. So what they do is they put it into cash value life insurance. Why? Because it's going to accumulate value over time. All right. So they take that cash accumulation, which is basically free money that they're earning. Okay. They have a warm body called you or me or any of us. Right. And they're making accrediting every year, getting returns on that policy. Okay. So what do they do with it? They get returns. They're getting, 6, 5, 7, 10, some clients up to 18 and 23%. We've seen. All right. What are they doing with this money? Well, they're going to leverage it. They don't go spend it on cash flowing, assets or just dead stuff. They're not going out and buying things that don't generate any more money. No, they leverage. That is what they do.
That's right.
I make money, I leverage. Dude, we just had this talk this morning, Woods, about one of our friends. He makes money. He's a contractor. He makes money and he deploys it to leverage it immediately the same week.
He's on another level.
Okay. Right. So why? Partnerships, big buildings. You go downtown, you see the sign on top of the skyscrapers. You see all the football, baseball stadiums named after banks. Obviously, the big salaries. If they think about it, dude, cool. If you're a bank and you have a CEO who is very talented, do you want to pay him a payroll out of our reserves or out of the money we're getting from the insurance policies?
Out of money from the insurance policies.
Right, because that CEO is he's very expensive. He's $2 million a year. And I don't want that bill. So how about we take our customers' money, put it into something that's going to make us money, and the money we make, we pay the CEO with that. That sound like a plan? Like that. Okay. Now they're leveraging. Now they're going to be like, oh, you know what? we can start selling some money now. AJ wants a house. Larry wants a boat. Coop wants a business loan. You know, Mondo's looking for a bunch of credit cards and stuff. Okay. So they sell money for 24% on credit cards and stuff.
Think about how gangster that is from a tax standpoint for them.
Oh my gosh.
That is ridiculous.
Man, the 24. Okay. You made six times the money in the insurance policy. You leverage it and then you put it into credit card products that's getting you 20+% return on the money. Business loans, I could anywhere between a 6 to 15%, depending on what's going on. And then mortgages, right? And then guess what? They have, who are they selling this to? Who are they selling it to? Back to the person that got the party started in the first place. Mondo and his wife.
Selling you your own money.
They selling you your own money at a ridiculously high interest rate after they made a bunch of money off your money. Now that's banking 101. I ain't mad at them. We're not poo-pooing on them. That's just what they do. That's how they hey, that's business, man. And I get it. So I'm like, you know what? What's that, man?
That's paying for convenience.
Yeah, that's right. So the question is, instead of getting mad at them, you know, here at AMG, we're like, hey, how can we be like them in our personal lives, right? Let's look, what can we do? Well, is this true? Well, yeah, this is a census that came out not too long ago, okay, a couple of years ago. And you might see your bank on here. I know I see mine. And this is with a B, not an M. These are the numbers and life insurance assets only. This is not mortgages. It's not credit cards. It's not car loans. It's not personal loans. This is not overdraft fees. This is not membership fees. This is not bank account fees. This is strictly life insurance assets. Then we hear, you know, why are they paying that CEO all that money every year? Well, they kind of have it. Right. You know what I'm saying? I can't get mad at them. You know what I mean? That's just how I think. Maybe that people don't agree with that, but that's how I think. Like, if you AJ, if you look at the percentages, right? So this right here, you can Google this as public information. Again, research for yourself, find it, and you can see that Larry did not put it on the internet. Okay, so this is actually real information. All right,
the crediting you're getting for $24 billion.
Man, what?
That's why all the salaries are increased at bank, CEOs, partners, all of those.
And check that out. And one of the biggest things too is that you can check this out. Like as we were talking about, like this is new to me. Well, look at the historical rankings. We can go back to 92.
That's right.
Oh, yeah. You know what? I had never paid attention to that, AJ, after all these years.
Way to point that out.
Great point, man.
So that goes back to your original point, Mondo. Just because it's new to you, that's all that means. It's new to you. It ain't new to them.
It ain't new to them. Nope. Well, when I first saw that, I was like, man, I am late to the party. Wow. Like, all right. So what's the play here? We see this, fellas. What do we do? All right. Well, let's be like a bank. Now, this is kind of where it gets sticky because, and y'all know where I'm going.
Yeah.
The whole language of be your own bank and all that kind of stuff. I'm really careful with that. Yeah, that I know we have it here, but it's more of a trigger to talk about it because you gotta be real careful with this. These types of strategies, it takes certain ingredients to do it. It's not the ingredient is not, well, I want to do it. Okay, that's a desire. That's not an ingredient.
Right.
There's several ingredients that it takes to be able to function and be able to finance and move your money around and leverage your money the way a bank does. Okay. And so we don't really like to talk about be your own bank and even, honestly, even private banking kind of bothers us. Okay. Now you may feel that way when you exercise these strategies, right, fellas? Like you may feel that way. You're doing things that the bank does. But put like this, them folks, they don't use language like be your own bank. They don't use language like private banking. You know what they do? They just execute and keep it moving.
Yeah.
That's all. They don't talk about none of this mess. You know,
So let me bring the cookies down a little more.
Come on.
It takes a lot of zeros. I'm going to say a lot to fulfill that strategy.
Yeah, it does. Yep.
So if you like, and it ain't middle class, FYI.
Yep. To really operate at that level, right? Full blown. Now, can someone use one of these contracts to use one of those tools on that knife, the savings account? Yeah,
absolutely.
Okay, that's probably the least or the smallest. Let me say it this way: the smallest financial commitment is that one. Death benefit too. You know what I mean? But the different strategies require different. You got to ante up more money. For different strategies. If you want to do project funding, that's going to probably hit you in the face a little bit. Okay. If you're looking at retirement, it depends on how old you are and what's going on with the health, and then what the design is and how many years you're looking to retire. And a lot of times it's not that bad. That's usually kind of a lower end, middle of the road kind of deal. And just let Father Time cook it. Next thing you know, you chilling in your golden years, tax free. Or, so all these strategies have a different financial commitment.
Yeah. Grounding expectations.
Yeah. Yes. So, we get this a lot, fellas, right? Like, hey, I'm trying to do, I want to be my own bank. And I'm like, okay, all right, let's.
And it's no fault to anybody's own, right? Like with social media, with TikTok and Instagram Reels and algorithms picking up on engagement, you're going to have a lot of these genius marketers out there. You know what I mean? Whether there be influencer content creators using trendy words like be your own bank and infinite banking or velocity, all these trigger words to be able to pique curiosity, be like, oh, what's this? How come I haven't heard about it? And then bring you in and kind of misdirect you, not fully uncover the whole picture.
Exactly. So just make sure whatever strategy you want to do, that someone's communicating to you what that commitment really looks like. Right. All right. So here's my wife and I again, counting our pennies, doing our thing. And we're like, you know what? We want to do our version of Bowley. Okay. We want to do our version. So we say, you know what? We're not going to store all of our, nest egg, all our money in the bank. Now, of course, we got to put money in the bank for groceries and, and bills. I get all that. But this is the money that you're trying to put to work, right, AJ? Like the money you're trying to put to work. All right. We're not going to put that and just sit in the bank in a dead savings account and do a whole bunch of nothing. No, we're going to move that bad boy into a life insurance policy and put it into some fertile ground. Put into a contract that's got a protected floor. I never lose. I get good gains. At the worst, AJ, like you said, zero's hero. I made nothing that year. But hey, 2008, that's negative 38% if I was in the market. So I'll take zero all day long.
If you're making zero in a contract, that means the market is underwater.
Underwater.
A lot of
you are chilling. And you are chilling on zero on the water. Yep, you in the inner tube drinking your Mai Tai, chilling, watching everybody like the Titanic. Like, y'all straight down there? Like, I'm chilling. Okay, trying to kill people off. That's messed up.
Yeah, that's just
So you put the money into life insurance contract, and the same deal. You get the uninterrupted compounding growth. Then we start leveraging. So the key points we talked about: tax-free, based upon the design, all that stuff, funding, blah blah blah. Income replacement, private banking, all the different things that we talked about, and then you get the death benefit. Okay, now death benefit is much bigger than what we talk about. Like this is a can't claim that's paid. Man, I've seen some clients when people have passed away, and what the wife or husband has done with that death benefit to really change the game for their family. Man, oh my gosh, I mean, I've seen people go from thousandaires to millionaires immediately. I've seen people have these good problems, Coop. They go from being just, good, hardworking, middle-class people to now they got so much money, they got to hire a bookkeeper, a new accountant who handles that type of money, someone who can advise them, on financial matters, and how to leverage and make more money. Because they're like, I don't want to lose it. This is a blessing. So how do we leverage it and multiply? How do we deploy it? That's your favorite word, right, Woods? How do we deploy? Right. And that's all because of this. And one particular family, their cash value wasn't that much because he only had it for 2.5 years and passed. And they got over 900 grand.
Changed the trajectory of the generation.
Exactly. All right. So here's some retirement examples. Whoever wants to jump in on this, break it down, because that's one of my favorite slides.
Tax-free retirement examples. Let me say that again. Tax-free retirement example.
I'm about to get a third fan. Let me find a third one.
You know what's cool about this? Yeah, get them 3 fans. It's worth 3 fans. If you own, the 401k, retirement, the Social Security, right? You chilling, and then you have this extra money come in, it's tax-free. It don't go against what you're already getting.
Man, what you said.
Your income doesn't, your stable income you have coming in doesn't have to reduce. And this is just icing on the cake.
Well, these are really aggressive high 6-figure numbers. I mean, that'd be nice. Dude, what if it's cool? What if it said 40K? Who wouldn't take that?
Right.
Yeah.
Who wouldn't take 30K? Who wouldn't take 24K?
Tax-free.
Tax-free. Come on, man. You add another $2,000 a month to your monthly income, you wouldn't take that?
In your retirement years? Come on.
Man.
So this example, this is a male, 35, right?
Yep.
$15,000 a year. That's basically roughly $1,250 a month to the age of 65. So 30 years, $1,250 a month. And this is what his tax-free retirement looks like. With North American, his distribution, if he lives to 85, $135,000 annually, tax-free.
Come on.
Core Bridge, $132,840. Fidelity and Guarantee, F&G, $130. I mean, and the list goes on. This is tax-free money.
Yes. That you own and you control.
You control. Now, you don't have to take this, but he can distribute. He can get distributed to him up to this amount.
Yep.
Every single year. Those are some nice vacations.
Man, what you said. Man, he got Florida shirts that, like, all through the closet, chilling. Flip-flops. He ain't worn shoes in 15 years.
Right.
Wait, Larry, you're saying that he doesn't have to do RMD on this?
Oh, RMD, yeah.
No. Required minimum distribution? Absolutely not.
So they're not gonna make me take it and then tax me?
They're not gonna make you take it and tax it. No, it can chill. Man. You can take it if you want.
You can actually take these distributions, but to pay for the taxes on them RMDs.
How about that? That's worth saying again, Coop.
Which you didn't forecast for when you were building your retirement. No one forecasts for taxes, right?
Right.
Or inflation. They're going to be more than typically than you were when you were working, because you don't have the child credit anymore. Your kids are growing out the house, and you probably have paid your house off, so you don't have that house credit anymore.
So I guess we should rewind that for maybe the audience. Like, what is RMD?
Required minimum distribution. So on certain vehicles, you can have the 401ks. You do have them in annuity products, depending on which ones you have and all that stuff. But in any sort of tax deferred vehicle, for sure, like a lot of folks have, you're like, well, you know what? My Social Security is good. My husband's income is cool. He carries a house. I really don't need to withdraw anything out of my 401k or out of my IRA, out of whatever. And I get that. That's cool. That's a great position to be in. Like, I don't need to take care of it. I don't need to pull from it, my 401k, because we're good. But the IRS is not happy, because for them, that's a breach of contract. When you sign that agreement to be a participant, they're saying, okay, we'll let you participate in this 401k program. We're going to defer all the taxes until you're older. And at 73, if you have not withdrawn or taken distributions by that time, they will force you required minimum distribution to receive funds. So then you can start paying taxes on that money. Because they're like, whoa, you're not going to avoid taxes from your working years all the way up until the time you die on this thing at 84, 85, 86, 90, 100. No. just to make sure we get something out of this, we're going to start taxing you at 73. And the only going to do that is make you take some money.
Because that's what our tax code says.
Exactly.
Our 401k tax code says.
Right. Exactly.
We want our money.
Yeah. Yeah. I mean, but you think about it though, to be fair to the 401k, I kind of want to be fair here. I get it.
Mm-hmm.
You know what I'm saying, AJ? Like, I get it. Like, if I said I'm gonna give someone a tax deferred vehicle, hey, you don't worry about it, just stack up and let it accumulate, But when you start, realizing it though, go ahead and pay the taxes then. Give me on the backside, right? Pretty much. Just take care of me on the backside. But then the person I had the agreement with decides, I'm not gonna realize anything. I'm gonna just hold it. Well, what about I gave you and you're not gonna, man, 73 RMD.
Right.
You said, let me hold this 20 and I got you next week, but never pay last next week.
Right. Right. So, I mean, I get it. I get it. Yeah. However, there are other ways to supplement, or maybe eliminate, to Coop's point. That's a great point, Coop. If you get hit on any sort of other thing, you can use this to take care of that. That way it's not bothering your household, income.
Even with two retirees in the same house, getting benefits. Dude, the market is crazy.
Yes.
Almost every year, actually, here lately.
Yeah.
At some point, you're going to take a dip. Can you afford to take a dip when your retirement years?
I know.
From a market volatility. And then add on top, taxes are going up, inflation is going up. Come on, man.
And let's not even talk about what the whole conversation about Social Security and where that might go.
Yeah.
So that's a whole nother rabbit hole. So what's the whole point here, guys? We want to empower you to establish ownership and be proactive. There were other slides where we talked about being proactive and having ownership. Be proactive. We're going to show you an example right now. Now I'm gonna zoom in for all those who wear glasses like myself. I wear contacts and stuff. So if I can I zoom in? There we go. There's the magic. Okay. So this is an individual. I'm gonna show you how this plays out. Okay. Now, before we get into the numbers of it, the reason why this was taken out for this individual is because this is the lady I mentioned who wasn't really certain about the work plan, the 401k plan that she has. Okay. And she wanted to take the bull by the horns and establish it for herself, have some ownership and be proactive. Okay. Let me show you the power in being proactive. Okay. Power in it. So you can see here at 38, we're already like a good amount of years into this thing. So this is not new. 12,000 a year, $1,000 a month. This is what she wanted to do based on her budget, her lifestyle, and what she wanted to put away into this thing. Okay. This is her number. And we were able to design it to where she only put in money, paid up option for 20 years. Okay. And the engine keeps running. She doesn't have to pay the rest of her life because of her health, her age, her funding, all that stuff that Bugatti designers know how to put together. Right, guys?
That's right.
Okay. Now, this is the turn. If you look over here, she's got a death benefit. Okay. Let me explain this, because if you're watching this, it's like guaranteed and non-guaranteed. What is the length? Hold on. This is where you probably need an insurance license to understand this, and we want to help you with this. Okay. So the guarantee is talking about the floor. The guarantee, we guarantee you will not make less than 0.25 on any end of year credit. That's what that means. This is guaranteeing you that you won't lose. Okay. And this whole chart is if you made 0.25 for the rest of your life on this thing, which if it did,
we have more problems.
We got bigger problems in this policy in America. I'll tell you that.
Yeah.
Okay. So that's never happened in American history. Okay. Now this is non-guaranteed, which is assumption to alternate. This is if you go fixed. So you don't want to get a high credit this year, maybe zero to next. You actually just want to fix, almost like a traditional whole life, 4.75 credit every year. Very predictable. That's what I want. I know what I'm getting. I don't have to wait till the end of the year to see if I got 7, 18, 4, 0, whatever. Okay. So we like to look over here, and this is a very conservative 6.54. So you can see her credit would be this on this example every year, and you have her death benefit growing. Started at 552 and on up, and lands here at 20 years at 952. So this is growing. which is a key design feature, and her account value is growing. Now, at the end of 20 years, she put in $240. She got $408,000 in there, doubled her money, just about. Okay. Now, all this money is liquid. See all that? That's liquid. Let's go over here. At 66 years old, we scheduled to where she's going to get a loan or withdrawal. You can withdraw any particular way, either one. $100,000 at 66, $100,000 at 67. Let's go to page 2. And 100, and we stopped it here at 81. She can continue because she still has the money in there. And she's got the death benefit as collateral. But what does that mean? The collateral means if she never pays, she's going to take loans. That's what we're scheduling, loans out. Because it's just a better feature. We can explain that to you in a consultation. Point is, she can take out more years. Y'all see that, fellas? If she wanted to. She can stop this at any time. She can say, I don't want 100, I want 50. There could be a few years she said, I need 125. I need 104. Whatever. Stop it this year. This is supplementing what she's already building with her job. She's going to have Social Security if it's still around. And she's going to have whatever, 401k, whatever she got, blah, blah, blah. And $100,000 coming in at what tax bracket, Coop? What tax bracket?
There's no taxes.
Thank you. Hello.
0.
Clean. Okay. So this is an example of how you can build a tax-free retirement. We have ones that are lower than this. So we have several that are higher than this. You get in where you fit in. Woods, I love when you say that. You get in where you fit in, man.
Yeah.
All right. Cool. Ooh-wee. AJ, Coop. I love these, man. What's happening on this one?
Project funding.
Mm-hmm. All right.
Is this the guy that did the duplex or the guy with the dump truck business? Which one was it?
This is duplex.
This is the duplex one. Okay.
It's the duplex. So the key part about this is I know I pause because I'm letting people look at the blue circle. I want that to sink in a little bit.
Oh, full screen here.
Well, it was customized for him.
Customized for him.
In his situation.
Thank you, AJ. Yes. Custom. That's the key part. Customized for him. So $100,000 the first year. Because he's not worried about the name of this contract. He's looking at what it does.
That's right.
So when we did all the analytics, all his numbers and the strategy, $100,000 the first year, and 2 through 10, $25,000 each year. It gives him cash value access, so he can start leveraging that money by taking out a loan, right? And we work through all that, what that means. But take that money and go buy a piece of property, turn it into a cash flow asset. You get that cash flow, you put it back into your contract.
Replenish the money.
Now, this is where people start talking, well, I'll be in my own bank. I'm doing private bank. Okay, whatever. Okay, yeah, yes, I guess. But the point is, instead of going to, whatever bank you bank with and say, hey, can I get, I need a $60,000 loan for closing on this particular property or whatever. You don't have to do that. If you do get it, the interest is going to be probably something pretty, stupid, but you don't have to do that. You can actually borrow it from yourself. And the terms are incredible.
Mm-hmm.
There's no credit check, no P&L, no nothing. You know what they ask? What's your name? What's your contract number? How much do you want? When do you want it? And where do we send it? Because we see you have it. That's it.
That's it.
And Mondo, how long does that process normally take?
About 3 to 5 days, depending on the carrier. Okay. About 3 to 5 days. But that's no time. That's a week. Right. And if you're doing planning, you got to close it in 3 weeks. Go ahead and get it now.
Yep.
If you're going to buy that food truck, like we got a friend that just bought a food truck. He's like, you can pull some money out of here. Go buy the food truck. And then to get that cash flow, put it right back in that bad boy. Man, you talking about independence, fellas? Whew. Come on.
Yeah. Different mindset.
Yes. This is why you said what you said earlier, Larry, about, Certain strategies.
It requires a little bit of funding.
Yep.
It requires it, as you can see here.
It also requires financial discipline and time.
Boy, say
it again, Coop. Say it again.
Financial discipline and time.
Don't just take the money and keep the money. If the asset is making money, put the money back. How about that?
Well, it's just like this guy, right? If you combine two different strategies, so like for instance, this guy's a real estate investor. He's buying duplexes. Everybody in the real estate investing community knows about BRRRR, right? Buy, rehab, rent, refinance, right? So if he's taking money off his own policy, doing the BRRRR method, and then rehabbing it, getting a renter in there, pulling that money out on another loan through a mortgage, using that money now to put back into his life insurance policy, then to do it again. It's like left, right, left pocket, right pocket, left pocket, right pocket.
Yep. Dude, you just gave somebody some game right there.
I hope they listening.
Yes, sir. Yes, sir. Hey, that was awesome because that's true. I mean, people have fun with these, man. So to Ku's point, everybody's point, the discipline, you also, man, I gotta go in the paint real quick. If you're looking to utilize one of these contracts,
going hard in the paint, take it higher. Going hard in the paint. We don't sugarcoat a thing. If it's real, let it stay. Bring the truth, let it
and
that gives you all rights to go hard in the paint.
Oh man, there we go. I appreciate that, man. That got me up. I'm about to start dancing, left my desk up and everything.
I know, right?
Dude, so if you are looking at this or any other policy or illustration or whatever, and because I've heard people say this. Now, I'm not picking on anyone. I just want to kind of forewarn people about the idea of, well, I get paid on this day and I can put my whole check in. But I got to get out in a certain amount of time because I got to pay my bills. Don't do that. That is, you know what that sounds like to me, Woods?
We in the paint, so let it.
Yeah, you know what that sounds like? It sounds like that dude in the hood that I could easily go to the store and get and learn how to do something or get something to correct. But I run up to the guy in the store and he's like, I got chains, I got watches, I got bracelets. What you want? Like, it's like that kind of mindset of you taking legitimate things and trying to hustle them.
Yeah.
Right? You're not leveraging, you're trying to hustle it. You're trying to do workarounds with a lack of resources. And it's dangerous. You're playing Russian roulette with your money, man. I need to get that out because I got to pay my bills on the 3rd. Like, oh my, don't stop.
Then this product's not for you.
And so I was told that such it's like, now we have some people coming and going on a somewhat regular basis. Yes, but they're well funded though.
Yeah, it's funded correctly.
They're well funded and structured the right way. Right. So, now if you're putting in smaller premiums, maybe in time, and most likely in time, you let it cook and mature a little bit. Right. Then, yeah, you can start exercising some coming and going. But I just being straight up, like you can't start off with small premiums and expect to do, these types of strategies out the gate. You got to build it.
Got to let it cook.
You got to let it cook and build. And to Ku's point, patience and discipline, man. And so that's one thing we won't do. And if anyone's trying to sell you that type of concept and you putting in $150 a month, run. So anyway, the math don't even make sense on that. If I want to be really picky about it, you know what I mean? It's like, the math don't even make sense. All right, AJ, we're at the recap, man. I think this is good, brother. Woo, fellas. The insurance business. Index Universal Life, whole life.
Safe.
It's safe. Well, how do we know that? Let me go back a little bit and show y'all something.
Let me pull that up.
That's how I know. Banks put their money. They're in the business of money, and people put billions of dollars in their institutions, and they send those billions of dollars into life insurance companies to create more assets,
billions more.
And AJ, I think you got me hip to this these stats right here. I'll get into reinsurance in a second, but you're the one that told me about the $10.7 trillion in insurance assets in America.
Yeah,
that's insane.
Mm-hmm.
Well, Mondo, if I hear this question one more time, well, how do I know? Like, what if the insurance companies and all that go out of business? I got to be patient, right? You got to pray for me, Woods.
Yeah. A lot of times I take a lot of deep breaths.
Yeah. I mean, now some of that is out of ignorance. I get it. It's like innocence. That's what I mean. Innocence. But some of it is out of skepticism. Those are the ones that make me go like that.
Yeah.
Okay. And then 40 trillion, you said, AJ, right? I think because you're the one that got me.
Around there.
Yeah. International insurance assets. Come on. But we can then, compare that. I would love to do a comparison between how many insurance assets there are in America versus 401ks in retirement plans. I would love to see that. Right. And then, of course, insurance is everywhere. Your phone's insured, your car's insured, your house is insured. Your house is insured several ways, depending on where you live.
Yeah.
Yeah.
Right. It's like insurance is everywhere. You can get insurance on the new coffee table you bought off Wayfair. You know who's selling it to you? Allstate.
Yeah.
For an additional $30.
I just got insurance on concert tickets I just bought yesterday.
See what I'm saying?
And some of what you mentioned, you have to get insurance. It's not an option.
Plane tickets.
Insurance is everywhere.
Yeah.
But the one thing in regards to your life and living benefits and all that stuff, nah, I'm good. It's like, what?
Yeah, right. Right.
What are we talking about? So it's really interesting. And then also we like to educate people on the reinsurance on reinsurance on all insurance carriers. So a lot of people don't know that insurance companies are interwoven. Okay. The insurance department is very smart, and they're geniuses at making sure they protect the integrity of the industry as a whole. And one of the strategies is reinsurance. So in order to be an appointed insurance company in America, especially, you have to be insured, even though you're an insurance company, and insured and reinsured multiple times over. So in case an insurance company goes insolvent, there's going to be other companies that pick up that book of business. That way the clients aren't hindered. The clients, their policies, their contracts, all that stuff stays intact. Now, I've seen this with my own eyes. This is not theory. I didn't Google this. I've seen it where I was sitting with a client who I thought had a carrier that, I was like, it's this company. And they were like, well, yeah. And I said, well, that folder is blue. The company I'm talking about is green. And I said, you sure we're talking about the same company? Right. And they were like, well, yeah. And I said, okay, hold on a second. I said, well, your old folder is blue. But the one we have is green. And what happened was I said, pull up their contact information. Let me read it. Same phone number as the one I was talking about, the green one. Same address. What it was is that the blue company became insolvent. They went out of business. And this other company that I was working with at the time picked it up. And everything was smooth sailing. I said, well, how's that transition been for you? And how that happened? He's like, it was fine. Nothing changed. I mean, I didn't know until I got it. I thought they just changed their, colors or something. I had new phone number, new contact information or whatever, but nothing. It was seamless. That's what they do to protect each other and protect the industry.
Look at the amount of funds being put into these insurance companies.
Yeah.
By banks alone. Come on now.
Yeah.
That's the protection.
I can really get long-winded on the bank and insurance relationship, but we showed you the proof of it regarding insurance, but there's some other deeper ways they're in bed too that is actually pretty phenomenal that we probably do on a different one. We get further down even on the securities side of things, it gets deeper, big time. Okay. All right. And then, there's more. Coop, you said something about this yesterday about the long-term care benefits. What we haven't said anything about that. today.
Yeah, and most of the time, a lot of agents don't touch on these. They talk about cash accumulation and they gloss over the life portion of these policies. So you've got living benefits, death benefit, and long-term care.
Yeah.
In the event that you become incapacitated. And again, they go further than just the death benefit.
Right.
I mean, no one thinks about, if I get injured, I break my arm, whatever, I can't work, right? I'm not necessarily disabled, but how am I going to pay my bills? My bills are still coming.
Yeah, there's waiver of premium benefits. There's stuff like critical, chronicle, chronicle. Oh my gosh, I said chronicle. critical, chronic, and terminal. Sorry, GOP. Slow down, Mondo. But here's what's cool. Like, let's really capsulize this, right? So you have a contract that is private. You have the ability to accumulate cash. You have the ability to leverage that cash for other living benefits, whether it be withdrawals, whether it be all the different strategies we talked about, which is about a good 7 or 8 other things within that bullet. You've got death benefit for legacy and estate preservation, funeral, all that stuff, transition, paying the house off, all that. And you've got long-term care benefits, which is a form of a living benefit, as Cooper was talking about. That thing is loaded, AJ. Loaded.
And it's all tax-free.
Loaded. And this is where I'm like, guys, where are you going to get all this in one spot? Now, honestly, a lot of the times, to your point, Cooper, some agents, I believe, don't talk about this part because it's scary. It's dark.
It's not
the boogeyman. It's not sexy. We don't want to talk. Hey, let's talk about that cash accumulation. And guess what? You don't even have to pay it back. You could borrow from yourself in the policy and you don't even have to pay it back. Well, technically, you don't have to, technically speaking.
Technically. Yeah.
But you should if you want to keep it.
Right.
And if you take loans, you are going to get an annual bill for the interest. If you don't pay it back within a year. Okay. So it's not just, let me take out 20 grand and just hide in plain sight. Be like, all right, no, you don't want to do that. Right. Check this out. Guaranteed protection from losses. I mean, Woods, you talk about that floor all the time.
Oh yeah. Zero is hero.
To me, it's real simple. If someone told me I could put your funds that are precious to you, you worked your butt off for it, it's yours, and you can protect it from market volatility. You can protect it from losses. You either make money or you possibly, which doesn't happen often, make nothing that particular year. Would you be interested? Nah, I'm good. Give me them dice. I'll go back to that market.
Well, even in some circumstances, like we saw on the illustration, like it's not even zero. You're still a little bit still.
Right.
Yeah.
That was 0.25.
Yeah.
Yes. Even in a down market, people making getting hit with -10, losing money all day, -15, 38, whatever, and you still making money. Well, that's only like a 0.25. Okay, go ahead and flip it and go get that -38. See if you're happy there.
Yeah.
Well, that's what the bank giving you on your little money sitting in the bank.
Exactly. Come on, man. Exactly. And then the last point here is secure your money in insurance contracts and not accounts only. Now, you can have bank accounts because we still need those because they're good for, daily living. We know that. And, maybe sweep accounts, moving assets from one place to another. We got to have all those things. I get all that. You can have other things that you want to do, if you have IRAs, you have this and that and the other. But here's the deal. I think where a lot of folks miss it is that they have certain traits and characteristics of what they want their money to do, but they have their money in a vehicle that doesn't do those things.
Right.
Right. It's like you want an awesome pet that you can cuddle with and all those other things and spend time with you, this and that and the other. But then you end up getting an animal that has no interest in doing that. But it's a pet though.
Mm-hmm.
Mm-hmm.
It's I got my pet. Yeah, but your pet doesn't do what you want. But I have a pet. It doesn't do what you want. Yeah, I know. Then you start making excuses for it. Well, I mean, he is better. It is gonna bounce back, right? Just give him time. It's like give the market time. It's like, no. So all those things, okay, you can have those things. But if your money is in a place and your tolerance is at a place where you can't take it, you can't take those losses. Maybe you don't have a retirement plan. Maybe you need to supplement. Maybe you need to figure out how to leverage your money to make more money. Maybe you don't have a way to leave a legacy and to protect your assets. Maybe you want to figure out a way to pay out the house if Henry passes or your wife paid off if you pass, whatever it is. Like if you don't have those things, then let's align your desire and need with the proper tool. That's the point. And you can't do all of that within accounts. You got to have some contracts. Woods, did you know that a lot of these vehicles that we're talking about, they don't use them?
Yeah, mainly because they don't own them. There's no ownership for them.
Right.
And there's little protection.
Yep. 3 or 2.
Yep.
That's 2. That's 2.
That's 2.
Yep.
And they make too much money for those.
And there you go. Strike 3. They make too much money.
Yeah.
So cool. Maybe I'm crazy, man. But this is how my little simple brain thinks. If I'm looking at them and I see what they do, and I'm like, man, that'd be nice to provide that for my family and be able to, I want to know what they know, figure that out, live, have those resources, live in similar ways, whatever it is. And they say, okay, well, they make too much money to have the thing, or to have the accounts that I have, these tools, but I want to be like them. So I'm going to get these tools that they don't use, but I want to be like them.
Mm-hmm.
That math is not mathing.
Yeah,
I want to be like them. It makes 0 sense.
Yeah.
Mm-hmm.
So I hate to be so brash and so whatever, but man, like I think sometimes our lovely, wonderful individuals that see this and are rocking with us, sometimes I think we got to hit people with truth, man, and stop trying to sound sexy about everything and trying to sugarcoat stuff. Like Father Time is undefeated. You don't know when that day is coming. You got time. You got to protect yourself and do things, assets, have fun with your money. Build something, and sitting around kicking the can down the road, him hawing around, talking about I'm gonna get to it tomorrow. Because what would we say, Woods? Tomorrow what?
Tomorrow has a tendency of repeating itself.
Exactly. So let's not be those people. Let's do something about it. Brother AJ, what we got to do if we're gonna do something about it?
Yeah, man. First of all, we just want to say, for everybody that's been watching through all of our platforms, whether it be Facebook, YouTube, LinkedIn, Twitter, whatever, we just want to say, we appreciate you guys, staying with us, hanging out with us for this last hour and a half. We see you guys in the comments. See one right here, it's like, this whole live has been free game, Bears and Cigars, and we appreciate that comment. But yeah, like what we talk about, it's about taking action, right? Let's stop procrastinating. Let's stop kicking the can down the road. Let's take action today. So one thing you guys can do is definitely subscribe to our podcast, our YouTube channel, follow us on Facebook or Instagram. Stay connected with us, reach out to us, doing things like commenting on our posts, reaching out to us via email, asking questions. Second thing is book a consultation with us. If there's something that you're saying like, okay, let me really start taking some action, go ahead, book a consultation with us. Links are provided on our sites. I'll be also posting a link to book a consultation with us too as well. And then thirdly, our complimentary gift. Again, you guys took an hour and about 40 minutes out of your time to watch us today and hang out with us. So what we do at AMG, we want to give you a complimentary gift. So if this is something that you're looking, I want to book a consultation. And again, this is booking a consultation. This isn't just asking questions. It's not Q&A. This is getting something started, whether it be something small, something large. We want to book a consultation and we want to give it to you guys completely for free without having to pay a consultation fee. Again, This is for anybody that's very serious about getting something in place. If you do have any questions, again, hit us up in the comment section below. Email us. We have different avenues of getting a hold of us if you do have just random Q&As that you want to dive in a little bit further. But again, if this is something that you really want to get started today, book a consultation. And if you're interested in that, drop consultation on our Facebook post, this one here, or our YouTube channel, And we have ways to be able to reach out to you there.
Yes, indeed. Yes, indeed. Love it. Love it. All right, man. This is good. This has been awesome, fellas. I love the conversation we've had today. AJ, you stopped sharing? You did that already?
Yep.
Oh, my man. See, you're already hooking it up, brother. Yeah, man. This has been great, fellas. I'm glad that people will find value in what we're doing. A lot of great information shared. So you going hard in the paint today. Love doing that. It's all good. Have some fun with it. But hey, with that said, guys, follow AJ's instruction and so we can empower you and rock with you. I don't have any you guys got any last words before we roll tonight? All right, we're good.
Thanks for hanging out with us.
Yes, indeed. Yes, indeed.
Like, comment, subscribe. YouTube.
Yeah, I know, right? I know, right? All right. Like, comment, subscribe, follow us. Yeah. Do all that. Like, because here's the thing, we're going to drop free game all the time, you know, whether it be on Instagram channel, whether it be, you know, wherever, like AJ said. Definitely plug in. We got a lot of great stuff coming down the pipeline. We're going to have guests in the future. We're going to have more topics. So we'll cover this again in the future. We'll have other areas. I'm giving you a sneak peek. We're going to talk about annuities and additional tools for retirement. We're going to talk about specific ways and really dial in on some of those tools on the life insurance piece. So talk about one particular strategy, right? And really dive into it. We're going to have some guests from different areas of the finance world. We're going to talk about some private investment opportunities and different things that we know that are out there, maybe to spark some, you know, some creativity in your mind and maybe ask some questions about how you can get involved if it makes sense for you. So with that, stay tuned, stay connected. Appreciate it again. We will see you guys the next week on the AMG webinar series from Mondo, AJ, Coop, and Woods. We will see y'all later. Have a good day.
Doses.
This the AMG way, we don't follow the crowd. Quiet money moves, we just say it out loud. Tax-free living, long plays over hype. Build it right once, let the legacy right. We talk ownership.